Hello, hello. Welcome to the Five Talents Podcast. I'm your host, Abel Pacheco. I interview the top commercial real estate investors and industry experts so you can learn from their experiences. So if you're an investor, a high W-2 earner, or real estate or tech sales professional that wants to invest in real estate without having to manage properties or leave your day job, then this podcast is for you. Or if you're already investing in real estate, but you're doing it part-time and you want to become a full-time multifamily or full-time commercial real estate investor, this podcast is for you too. You're going to learn a ton. You will learn from real-life multifamily investors and other professionals in the industry. They're going to share their blueprints for success, and I'm super excited that you're here. So I hope you enjoy the show. Hello, hello. This is Abel Pacheco, your host for the Five Talents Podcast, where we talk about all kinds of things, commercial real estate, financial independence, among other things. So we're super excited to have Mr. Chris Salerno on the show today. How's it going, man?
I'm doing amazing. Thank you so much. Very excited to add value to all your listeners.
Yeah, man, and you definitely will. I'm super excited that that we met, and thanks for joining our show today. So for those that don't know, let me give you a little bit of background on why you should grab a pen and notepad to take some notes.
Thank you.
Yeah, absolutely. So Chris Salerno, yes, you've transacted more than $40 million of real estate volume. That's you, but you've also helped lead like a number one real estate team in the Carolinas. You produced $140 million in annual sales prior to creating the current company that you're working with, QC Capital.
Oh yeah.
And that's so, for a moment there, let me just sit back for a second and say, okay, $40 million transactions, 140 as a team. So very impressive numbers.
Thank you.
I think where people are really going to appreciate if you have hangups about your ability to get something done, Chris, you've done a lot of that. The $40 million, that was before the age 24, correct?
Yes, that is correct. And I did not tell you also, but I'll throw this little sneak peek in.
Sure.
I'm currently raising $350 million for a fund. So doing a lot.
just a little $350 million,
Yeah.
It's a stone throws away from $1 billion. So,
We're almost
eventually
there.
See what happens.
We'll hit that billion mark.
Nice, man. And for those that don't, know Chris, and you start to Google this individual, this very successful gentleman, you'll find he is he's been named Charlotte's 30 under 30, Elite 50s, Elite 50 entrepreneurs. He's 30 under 30 entrepreneurs and nominated for Forbes 30 under 30 in 2018 and 2020. So just some tremendous background. He's the CEO of QC Capital. So you guys are a national multifamily investment company?
Yeah, we focus on the Southeast.
Yeah, that's awesome. 100 units plus greater, I would imagine.
Oh, yeah.
Okay,
yep, that's
good.
right.
And so you guys focus really, the way I understand it, markets that demonstrate consistent rent growth, population growth, job growth, just kind of that fairway down the pipe kind of deals, right?
Yeah, when it comes to real estate, everyone knows that saying, location, location, location. And when it comes to population growth, the main thing we focus on is job growth, because jobs are going to move the people. So as you see in Austin, Dallas, Houston, Charlotte, Raleigh, you're seeing a lot of jobs moving to these cities. Well, what are they going to have to do? They're going to have to hire people. So you're going to see a lot of employment in those cities. So it's good to follow those large companies that are pushing these jobs and following where they're going. And they're going to the Southeast, major Texas and Carolina markets.
Yeah, man, that's so QC is poised for amazing growth and a lot of success with the fund that you're working on. So I definitely want to talk about that. I know you also sit as a board member for that real estate opportunistic fund. So let's jump in. You've had a tremendous background. Tell us more about who you are and lead into what you're doing today.
Yeah, thank you. I actually stepped down from being a board member for that fund so I can focus on our fund and all of our assets. So I'm no longer on there. But for me personally, I didn't come from a wealthy background. I came from working hard. I saw when I saw my parents, I saw how that's not how you're supposed to deal with money. So I taught myself how you're supposed to deal with money, how money flows. And from that's when I really, started educating myself, having a positive mindset, the never give up attitude. And my employees don't know how I operate. I run off 4 hours of sleep a night, and it's just I'm a machine. I don't think about it. I don't think that I'm tired. I don't think that I'm going to relax. I just go, go, go. And I do take my breaks and I meditate and I make sure my body has rest. But if you think on negative thoughts, you're going to ruin everything. So when I first got into the business, I had people that told me leaving residential, those transactions in my bio were from residential. I had people telling me, you'll never buy a multifamily complex. You won't be able to do it. You're not going to be able to create a $350 million fund. No, no, no. And I just kept going. I just, thank you for your opinion. But I just kept going. Elon Musk, people told him he can't go to Mars. People told him he can't do it. Look what he did, So I think creating that positive mindset has definitely gotten to where I'm at today, and to help project everything. But that's a little bit about my history. I came from single family into the multifamily space. I didn't come from anything. Everything I did, I ended up working 2 jobs to sell real estate. And then from selling real estate, I pivoted to multifamily.
Yeah, that's awesome. I would say tremendous kind of mindset, and the perseverance, the determination, dedication. When you hear people, the naysayers usually, and those are the ones that you have to kind of eliminate as much as possible, and thank them for their hard. Thank you for their note, and then continue hard working on, man. And you've got a goal in sight. So how did you come to set your sights on multifamily, and then how did you come to set your sights on this next fund that you're working on, and such a large number, and just
So multifamily, I studied the '08 crash, and I realized '08 crash was single family crash, but I studied multifamily, and multifamily is the strongest asset class that prevailed, and it recovered the quickest. So I said, this is the asset class I'm going to focus on. Another reason being is it's a necessity. Where are you right now? You're under shelter. I'm under shelter. We'll always have to be under shelter. Right now, it's pouring down rain all day today in Charlotte, North Carolina. You have to be under shelter. You don't have to, but you're going to want to be. So when it comes to multifamily, it's just in such of a demand. It's a necessity. There's an apartment complex down the street from where I live. They have a golf simulator inside. They have a putt-putt range inside. They have a masseuse room inside. Now, why would I want to do anything else? They got Pelotons in their gym. I mean, why would I want to live in a house when I can live in a very nice luxury apartment complex and everything's taken care of for me? So it's a necessity, and the generation now is coming to a low maintenance, and that's what people want. They want low maintenance, and they want it now.
Yeah, and my mom told me the same. She's in her late 60s, early 70s. She said, will you please help me sell my house when the time is right? Because I want to move in, one of the senior facilities, and they take care of me really, really nicely. Like, yeah, Mom.
Yeah,
I hope you do what you want to do.
That is how it is. And there's actually a 55 and older community, strictly apartments, right by where I live. Yep. So it will, that right there, that type of asset class will be in a high demand. But so that's why I got into the business. Creating the fund, the reason why creating the fund is my goal is to create the next KKR, BlackRock, Blackstone. And to get there, you have to leverage and you have to seek the pensions, endowments of the world to start buying more real estate. Right now, I had like 4 deals come across my desk today. And as a syndicator, you can only syndicate so much until you have to go seek more investors. You'll have to then from there go to larger investors. So it's very important to tap into the institutional world so you can grow.
Yeah. And I think you're the right stage in your career. While you are, I would say, younger than a lot of individuals that I've talked to in commercial real estate, the experience, it kind of grows with you. So investing, I'm sure institutions are looking at you and say, you know what, this guy's young. I'm going to get after it. He seems very successful. You've done great things.
Thank you.
And if I put some money with you, then I'm also going to be able to be with you for the next 10,
Correct.
15,
20,
whatever
100
years, right?
years. I'm gonna live till I'm 100.
You're going to live
So,
till you're 100. I love it,
you
Chris.
know,
So,
and not only that is that we're not looking for a one-off investment. We
mm,
want an investor
mhm,
that a pension endowment that's going to be with us for that 50, 60 years. We're
sure.
going to build that strong relationship for the future. We're not looking for just that one-off person. So as an investor at that nature, they are able to work with us and to build that relationship for long term, because that's
Yeah.
what we're seeking. We're not looking, we're not looking for that one-off investment. And on top of all that, we are younger, but we're motivated, we're hungry, and we know how to source deals, which helps us tremendously.
Yeah, that's awesome. So, right now, like I'll give you an idea. I hear a lot of syndicators are probably doing it something similar to me, which is I work with, friends, family, people that I know, people from my past, and they're investing, 75, 100K at a time, $50,000 minimum investment. Sometimes it gets a little larger for the right investor, hundreds or so, but there's no institutions that I'm taking, investments from, right?
Correct.
So if you can give, give some of our passive investor listeners, maybe some of our new general partners, some insight to the institutional funding of these opportunities. And, I have a few more questions, but let me just start there. Let's, kind of frame it a little bit.
Yeah, so when it comes to like partnering with institutions, it can be difficult. It's a long, tedious process. Literally, the reason why I was late to our calls, I was talking to another fund manager of mine who
Mm-hmm.
just got a commitment of 300 million, and it's a long process. It's not easy. It takes 6 months to a year, and because they search you, they do everything. They do a full background check. I mean, they come visit you at your office. They're not going to just lend that much money out. So it's
Mm-hmm.
it's very important to really make sure you have all your ducks in a row, everything's lined up, you have a good compelling story, and then the partnership with them. You got to do quarterly. It depends on who you're investing or who's investing.
Mm-hmm.
Quarterly updates, but some people want to be more involved than others. So you have to have a fund administrator, a fund auditor to audit you on a quarterly basis.
Mm-hmm.
So all that plays into a factor when it comes to partnering with an institution.
Got it. Okay. Hello, hello. You're listening to the Five Talents Podcast. I'm your host, Abel Pacheco. If you're enjoying this podcast, then I know you're serious about achieving financial freedom. Are you ready to create your own path through multifamily investing for yourself and your family? Then I know you're going to appreciate our Investor's Guide to Multifamily Investing. It's titled Tackling Commercial Real Estate the Easy Way. We use this guide to invest ourselves in $93 million worth of real estate. So we're going to show you the basic mechanics of multifamily syndications and how to evaluate your next passive investment opportunity. So the best part, if you subscribe to our podcast now, leave us a review and a rating. I'm going to give you a free copy of our ebook. So please take a moment to do that now. Once you've done that, go to 5tcre.com/ebook, 5tcre.com/ebook. Make sure to let us know you left a review and we're going to send you a free copy. So thank you so much for subscribing to the Five Talents Podcast. We really appreciate it. So I'm let's say I'm non-accredited investor. You're not doing 506B investments.
All 506C.
Okay, so 506C. So I have to be accredited to play. Can I put in 100K with you, or no? You literally only work with institutions, minimum investment, couple $1,000,000, or how does that look?
So let's talk more about the syndication. When it comes to the fund is a minimum 5 million.
Okay,
But
gotcha.
we are still syndicating assets. So when it comes to the syndication, if you're an accredited investor, we only accept accredited investors as a 506C. Hopefully we'll release tomorrow our new offering.
We're
Via
excited
social
to see
media.
some of that. So I think this will probably be coming out in October. It's recording mid-September 2020, so this will come out like sometime in the next few weeks, and then you can reach Chris on that if you guys are interested. But
That would be
it's
perfect
super cool
timing.
to learn more, right?
Yeah.
So I'm an institution. I'm looking for somebody like you, man. I'm really going after, or you're going after, and vice versa, seeking each other out. So very different than the space that I'm playing in, right? Which
Mhm.
is, smaller investors. But give us, both passive investors and maybe new general partners, what are the insights that you can provide us that would really help us in our business, the way we're doing it today.
I love
Um,
that you're saying that because I'm actually on my final stage of chapter 6 of my book that I'm writing
I love it.
for LP investors looking to invest and partner with GPs.
It sounds great.
I'm excited for that to release. But I would say, it's for an LP investor, you should ask a lot of questions. You should, in my opinion, invest in markets if you live in Dallas, Texas, don't go invest in Seattle, Washington. Now, the Carolinas are a hot market. It's easy to hop on Google and spend a week to 2 weeks and study it all. I think that's tremendous. I think you should do that before you invest with a sponsor out in the Carolinas. So as LPs, I would really do your market research on your sponsor, on the GPs, and also on the deal and the market itself. As a GP, let's talk about seeking new LP investors, leveraging social media at a high level, creating a great podcast like what you've done. Those are some great ways to add value to people, because that's what you should be doing, is adding value to people and educating them on how they can invest in these larger deals. When I was a kid, I looked at these larger deals and I was like, I wonder who owns these. Probably like Wall Street or the government, or these big old banks own these buildings. I didn't know I could have ownership in a 200 unit apartment complex.
Yeah, yeah,
Once I started figuring that out, I was like, holy cow, I want to know more. So educating people on how they can do that, I love doing, and I think GPs and sponsorship teams should be doing that to gain investors.
yeah, yeah. That's awesome. All good insights and all
Yeah.
good wisdom. When's your book coming out, man? I'm excited.
I did push it back a little. It was supposed to come out in August, but I had so much going on with the fund, with
Sure.
finding us a new deal, with putting the systems in place as a company. So I'm on chapter 6, which is fee or breakdown on distributions and stuff like that. So hopefully once I wrap that up, hopefully by the end of the year, with everything that's
20,
going on.
so maybe 2021 we'll see. And is it going to
Yeah.
be I guess hard copy and
Yep.
also ebook or Audible or all this
No,
stuff?
it's going to
Or
be a hard copy. The
yeah.
thing is, it's a booklet.
Okay.
So it's not going to take you 4 or 5 hours to read. It's not going to take you a week to read, or, you got to read a chapter, you're done. It's
Yep.
six chapters straight to the point on how and why LP investors should ask certain questions to GPs, what
Mm-hmm.
questions they should ask, straight to the point, no fluff. You can probably read it in less than an hour and a half or less
Right.
than an hour.
Right. Yeah, because even and that's awesome, man. Congratulations and kudos to
Thank
you.
you.
I know how hard it is to kind of put something together. We did
Oh,
like
yeah.
our first ebook, and even that took
I
me
know.
forever. And
It's a great ebook that you have.
yeah, man, thank you very much. And so excited on it. But the fact that you're giving back while you're having success is, that's really awesome, man. Helping others up at the same time. And you had success as a syndicator before you went to the fund.
Mhm.
And, now are you also seeking other general partners, like good operators for your fund? Or how does that actually, play out? Who's actually doing the operations of, all the deals that the fund's going to buy eventually?
We do. So it's all in-house. We do operations when it comes to the fund. When it comes to the syndication, we syndicate each asset from accredited investors, and we're still partnering with LP only accredited investors for our deals.
Yeah, gotcha.
So yeah.
So no, you're not investing fund money into someone else's deals either. It's all going to be kind of vertically integrated, if I could say
Correct.
that.
Yeah.
Okay, got it. So tell us about some best practices, man. We want to learn. You've done it at scale, or you're going to do it at scale. That's for sure.
Yeah.
You're doing it now. So tell us some of the the learnings. Like, man, what's the thing that you'd never thought you'd have to solve for, or you're solving for now, that would also help somebody like myself doing one deal at a time?
Yeah, no, and we still syndicate deals on a deal by deal basis. I would say educating yourself is number one. Listening to podcasts like yours, like ours, reading books, the ebook that you have, educating yourself, because education is not, or is power. Knowledge is power. I have a whole real estate company that wants to book me as a coach, and I told them that I will not do it, but they're thinking about 20, 30 grand a month. So that may be worth my time. Um, so when it comes to that, knowledge is power, because they're good. They're paying for my knowledge to
Mm-hmm.
take them from one level to the next.
Mm-hmm.
Right now, we have an advisor that we just brought on to the company, a new advisor. We alongside of our existing advisor, and I can probably buy a Lamborghini on what I pay him
Yeah.
on a monthly basis. But I'd rather pay him to, one, help grow our company, because
Mm-hmm.
if our company's growing, I know our employees are going to give back to the community. And I'm a firm believer: the more money you have, the more people you can help. And
Yeah.
that everyone in our company believes that.
Mm-hmm.
And so we all have the same interest. And I think that's what's helping out a lot.
Yeah. Where I'm in a mastermind, and it's Kingdom Capitalist. It's like a
Uh-huh.
Christian mastermind,
I
and
love him. Ellis, great
yeah,
guy.
yeah. And we went through a what they called a jog, a JOG, journey of giving, and they had a bunch of entrepreneurs, many multiple stories entrepreneurs, about them giving back, and the amounts that they gave back was just it's pretty mind blowing. But the mindset was that it's yeah, I want to be wealthy, I want to be extremely wealthy, I want to be very not only financially independent, but I want to
Yeah.
have more money that I can do greater things with. And just kind of like you said it, you're a firm believer. The more that you have, the more that you can help others and help other people with. And it's money's yes, it can be. You can do a lot of things the wrong way if you have
Oh yeah.
much of it, but if you have the right intentionality about doing it, you can do some great things with it. So
Yeah, I've talked to my team about creating QC Foundation. What's QC Foundation will be multiple different avenues to help nonprofits, to help the little dogs, no kill shelters, to help the Underground Railroad Act, and to also create a software into low income areas to help individuals create a positive and a strong mindset for
hmm
success.
oh,
So,
that's all. And so you're already kind of thinking about, hey,
oh
that's
well,
what we're going to
yeah.
get after.
Our team's already putting little pieces together. Yeah.
That's great. That's great. So at this point in your run, right? I'm
Mhm.
excited to see you when you're like 35 and 45.
Oh,
I'm gonna be like, I interviewed Chris on my podcast back then. I did, and
oh,
but anyways, where you're gonna hit this 350. You're gonna
yep.
get it. You'll get it, man.
Thank
And
you.
then what stretch of time is that? Like I'm thinking of a 5-year window myself. I got a 5-year deal. I'm going to close one. Maybe I'm, working in the next 4 or 5 years. And that, really stretches out to 15, 20, 25. I want to continue doing what we're doing. How do you look at time, in that quantity of dollars and that quantity of deals, and as it relates to, just what you're doing?
Yeah, so when it comes to the fund, according to our performa, we'll have to buy anywhere from 20 to 25 properties within 3 years.
Okay.
And then we'll have to sell those off within 4 years from that 3 years
Okay. So
to then close
7.
out the fund. So a total of 7 years, yes.
Got it. Okay. Well, that sounds reasonable.
Oh, it is.
It's not too much longer. It's just a matter of like front loading as much as you can now
Yes,
with good deals that work.
correct. Oh, yeah.
Okay. Okay. So let's talk about that for a few minutes. What are the qualifications like when you're underwriting, when you're looking at the numbers,
Oh,
when you're
yeah.
looking at the analysis, like what makes sense in your world?
Yeah, same qualifications for our syndication that we do on a daily basis. 100 plus units, or for the fund is 150 plus units, primarily B and A assets in the Carolinas and in Texas markets. So very simple. Return metrics are a little different, anywhere from 12 to 15% IRR. But that's what we normally look at anyway. So it's nothing out of the ordinary. We're still going to be doing our same practices. It's just going to be a little different where we're not going to have to raise the capital on a per deal basis. We already have the capital readily accessible. But like I said, we're still going to syndicate assets. So we'll still be syndicating assets and partnering with LPs.
Right on. So it's it's a COVID time. We don't have a vaccine. We're trying to figure this stuff out. All this craziness, right? Yeah. And we just started making offers. So like on our side, and prior to this, we were kind of in that that mode. Like, let me pause. Let me see what's going to happen, right? And now we're like, okay, I feel comfortable. Let's keep moving forward. We've made some tweaks to be more conservative through this process, right? What are some of the things that you've done to kind of make sure that you guys are staying conservative through the heavy acquisition mode you're in?
Yeah, very much so. So, I shook my head because this COVID stuff, I don't believe it personally. Reason being is Charlotte just posted an article saying that they messed up all the COVID testing. So it's like, I mean, is it real or is it not real? Why are you telling people they're positive and they're not positive? I'm like, so yeah, when it comes to that. But when it comes to underwriting, we do underwrite very conservatively. It depends on the market and where the asset's located. Also collections when it comes to the property. So for example, normally operators will underwrite at a 3% rent growth at day one or year one. We're looking at 0% or 1%. And deals are still penciling in. They're very hard to find where we've built great relationships with brokers to go off market, but it's still very, very hard to find.
Got it. Okay. So that makes sense. And then when you're looking at the deals, how many opportunities are you underwriting to find one that works today?
Ooh, if I looked at our deal list, I think we have like 30 or 23 to 30 deals right now. And I would say out of that 30, probably 4 to 5 actually pencil in. But the issue is they pencil in, and then when you get to highest and best, people outbid you. So, they may pencil in, but, will they outbid you? But now it comes down to, are you going to put hard money down and things like that? So
I heard from a broker panel last week, a deal, and this was in Austin, I think, 200 some odd units, whatever the number was, right? It's a big deal. And it had like 40 something offers on the deal.
I believe it. Yeah.
And
I believe it. Yeah, no, I talked to some Dallas brokers too, and they have a lot of deals that or a lot of offers on these deals still. Yep. But now it's how are you going to the deal that we just got awarded? We beat out a company out of Texas who had over 15,000 units under their belt.
15,000.
15,000.
And you were the winner. What?
We only have 364 currently.
What's the situation? So how did that play out? Maybe, or whatever you feel comfortable sharing. I don't know where you're at in the,
share it.
In the process.
It's a 506c, so it is open to only accredited investors.
Okay.
But it was broker relations. Broker even came to me and said, I don't know this group, but I know you guys. And I put a significant amount of hard money down because that's how confident I am on the deal.
Yeah. Well, that definitely helps.
Yeah. And you're going to have to do that moving forward. There's no, you're just going to have to do that moving forward if you want to compete with anybody.
Yeah. And for those passive investor listeners or the kind of newcomers, basically there's some earnest money that you're putting down, just like a, single family house, and numbers are a little bit larger and you're trying to put a significant chunk down. So if you make it hard, it's basically they're saying, hey, non-refundable after a certain period of time, or right up front in the beginning. And if you put a large chunk of change there, I guess the seller knows that you're serious.
Yeah, the seller knows.
Yeah, the seller knows that you're serious. So what's the plan for the property? What kind of business plan? Let's use this one for an example. Yeah.
Yes, sir. Go ahead.
You broke up for a second. Say that one more time.
Yeah, I was gonna say, go ahead. I get excited, so I tend to interrupt a lot when I talk.
No. I'm okay with that, man. I do the same. So let me pause. But yeah, on this deal, since we're on it, let's talk about the business plan. What's the plan for this property?
Yeah, plan for the property is value add completely. A CoStar report shows in this in the Greenville, South Carolina market, the average price per door is 129,000. We're buying at a little over 95,000 a door. So we're going to be able to go in there, put our value add play into it by painting the units, scraping popcorn ceilings, redoing the cabinets, resurfacing countertops, doing the outdoor amenities better. We're a new dog park, new outdoor gym, really enhancing the leasing office and switching it all around and enhancing the experience for the tenants. And that's the play for this asset, which is going to be able to get us our rent premiums, and we'll be able to exit in 5 years very well.
Got it. So interior, what kind of interiors will you be doing on this one? Is it a B deal in
It's
an
a
A
C
neighborhood,
plus.
or
It's a C plus B asset in an
Okay.
A or in a B plus A minus area.
So the type of interior unit renovations, like I don't know if you know this offhand, but
Yeah, no,
like price per unit, how much you're putting in it, and what kind
yeah.
of improvements you're
I'm
doing?
going to give a range. We're putting anywhere from 7,000 to 8,000 per unit. We're not doing granite because the
Okay.
market's not needing it. And
Mhm.
believe it or not, a lot of these Class A's I'm seeing are not putting granite in anymore. So we won't be putting granite. We'll be putting LTV flooring throughout, gray paint. We're going to scrape the popcorn ceilings,
Yep.
stainless steel appliances.
Stainless steel.
Yeah, so little things like that make a huge help.
The gray and white is in right now, right?
Always, yeah. I don't see it going out anytime soon.
And stainless, and then what kind? So the surface is not granite, but something else. And
Yeah, hard Formica, just type of surface that looks good.
okay, well, cool. That makes a lot of sense. And
Yeah.
then what kind of improvements, like rent? Sorry, what am I trying to ask? The improvements that you're getting, what kind of rent bumps will that provide you with this particular property?
125 to 175.
Okay, got it. And then can we talk about the units? How many doors it was, all that stuff?
144.
Okay. So help walk somebody through this math, right? Like, I'm a new investor and I hear this plan. Oh, well, that makes sense. I'm going to do a new unit upgrade and I'm going to put some, a little love into it, about 7 to 8 grand. How do we actually know we're going to make that return back for a passive investor? Like, what does that mean to your property? How much, value are you increasing it? NOI, and
Oh my goodness.
talk about all this stuff. So
It's
somebody can understand.
outrageous how much the value, even if you did like $25, 25 times, for example, 100 units. I mean, that's going to jump your evaluation up by a couple, but probably a little 1.2 to 1.5 million. So it's going to jump it up tremendously. And that's one reason why I got into multifamily. So for example, when we send out our 506C deal, we'll have our OM on it, and on our OM, it will break down all of that. So you can get a good idea and a good feel on how the returns are going to be based off of what we're going to do in our business plan that we've already done on previous assets that we're going to do on this asset.
Yeah, that's awesome, man. So, and just, from the creation of net operating income, that it gets, the valuation is much different than a single family house, right?
My
So
goodness,
people want to put their dollar in, they want to get a certain return, and that's how they're measured, off of cap rates. And so, man, if you're doing 144, units at $125, it's like, a little under 20 grand a month. Multiply that by 12 months and you're at 240K. What's the, what kind of cap rate or exit cap rate is like in your, in this general area?
In the Carolinas, you're going to find anything from a 4 to a 5 cap. 4 to 5 in that ballpark. If you go over 5, I'd be questionable about the property.
Yeah.
But I haven't seen any. I've seen one asset over 5.
Yep. Okay, got it. Well, that's all. The Carolinas.
That's right.
I keep hearing it. Good market, hot market. I don't know any of the mechanics there. Maybe if you can tell somebody too, like, what makes Carolinas a good market. But we're framing this kind of even back what you said at the very beginning, which is, hey, this is how to look for this is how you look for a good market. Maybe you can point it in that direction.
Great question. So a lot of people don't know Charlotte is the second biggest financial district in the United States, right after Manhattan. So it is a large financial hub, but the diversification in the jobs and in employment in Raleigh and in Charlotte is really what drives people. The low cost of living, the taxes are fairly cheap. Your money goes a pretty long way. And the atmosphere in Charlotte, I'm 2 hours, 2.5 or 3 hours from the mountains, 3 hours from the beach, depending how you drive. And so the weather's great. I mean, it's a great atmosphere. So a lot of people move here because low cost of living, cheaper taxes. Employers move here because of cheaper taxes, and it's a booming market. We have an international hub for American Airlines, and everyone wants to be here in the Carolinas.
All right. Well, good. Thanks for the insight.
Yeah, for sure.
Well, I have a couple more questions, but before I do that, I would be amiss if I forgot to let people know where to reach out to you, man. So who do you want to contact you, and how can they get in contact with you?
Yeah, so we only partner alongside LP accredited investors only. So if you're an accredited investor and you're looking to LP in a deal or LP for a couple times and learn more about the GP side, that would be the best way or that would be the best person to reach out. Just go to our website, qccapitalgroup.com, and you'll be able to set up a call personally with myself, and we can discuss a potential partnership opportunity.
That's awesome. And the easiest way, like you said, QC Capital. I'll put that in the show notes.
Yeah, QCcapitalgroup.com. I also have a closed Facebook group, which is the Mindful Multifamily Network, where we all network and talk about real estate. So if you join that and then go to QCcapitalgroup.com, we'll be able to set up a call.
Cool. I will definitely put those in the show notes so that everybody can reach out to you. And is there anything today that I didn't talk about that you really want to hit on? Anything highlight? Whatever. Take as much time as you would like. Anything
you are one great interviewer. I'll tell you that. I'm very excited to be on your show. And just to wrap things up a little bit, I've been in Charlotte a little over 13 years. I know the Carolina market very, very well. And we still syndicate assets. I know we talked a lot about the fund and everything, but we still syndicate assets because our goal is to help people and help educate people that they can own a part of these large buildings. And we love doing that as a team. So love to chat with anyone who's accredited and is looking to get into the Carolina market.
Oh, that's awesome. Hey, thank you very much.
Thank you so much for having me.
You've been a great, amazing guest, and we learned a lot, so I appreciate it. And man, thank you very much, Chris. Thanks for everything.
Yeah, thank you so much for having me.
All right.
Take care.
I am Abel Pacheco. I'm your host for the 5 Talents podcast. I know you got some nuggets today. If you heard something that you really appreciated, please go back. Leave us a 5-star rating, leave us a review, leave Chris a note in a review. That'd be awesome. And if you have any questions about investing in with us, our website is 5tcre.com. The book that we mentioned also is on there as well, 5tcre.com/ebook. And look forward to meeting with you guys. And Chris, thank you very much, man. You've been
thank you so much for having me. Very excited to be on. Thank you.
Bye, everyone. Thank you for listening to this episode of the 5 Talents podcast with your host, myself, Abel Pacheco. Each week, we're going to bring you interviews from industry experts and commercial real estate investors who followed their dreams and achieved massive success. Before you leave, let me ask you a few questions. Did you enjoy this episode? Did you learn something valuable? Was your mind stretched to what's possible and what you can achieve? Do you want other experts just like the one you heard today? If you answered yes to any or all of those questions, then please take a moment to subscribe to the 5 Talents podcast, give us a 5-star rating, and most importantly, leave us a written review. Tell us what you liked, tell us your favorite guest, give us any feedback. I'm excited to learn and improve so you can get a more valuable show. So thank you again for subscribing to the 5 Talents podcast.